What's going on, everybody, and welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So please make sure that you like, please subscribe. Make sure you listen to this episode from start to finish. I promise you, you will not regret it. Please note that anything discussed in this episode is not financial advice. So please do your own research before investing into any stock. Look, everybody, Webull is going to give you up to 12 free stocks valued at up to $3,000. There's only 3 things I need you to do to get that free money. Number 1, click the link in the description of this episode. Number 2, open you up a Webull brokerage account. And number 3, deposit any amount of money into that brokerage account. You're going to get up to 12 free stocks valued at up to $3,000. Look, if you are new to the stock market, even if you're not new to the stock market, tap in, use this as an opportunity to get you some free money to be able to start your portfolio. In this episode, we're going to be talking about, is Nvidia stock the next Tesla stock? And what I mean by that is the level of volatility and the way that this stock moves. Look, I made it my business to make sure that I have an episode to talk about Nvidia's earnings before they come out, so you can be prepared to understand what I believe that you need to do before you think about even trading this stock before the earnings happen. We're going to talk about what options traders are doing ahead of Nvidia's earnings and what I believe you need to think about in terms of Nvidia, being the next Tesla stock. Let's get right into it. Okay, everybody. So Nvidia options show that traders are positioned for outsized share moves after earnings. So traders in the U.S. equity options market are expecting a larger than usual swing in Nvidia shares following the chipmaker's quarterly results after the close on Wednesday. Nvidia's options imply a nearly 11% swing for the shares in either direction by Friday, according to Trade Alert data. A move of that magnitude would be larger than the 8.6% average swing on the day after the chip maker's results over the last 8 quarters, but still well below the 24.4% jump after the earnings report. The stock has gained about 11% in the last 11 sessions, taking its year-to-date gains to about 210%, and has drawn option bets on further gains. But for contracts expiring this week, Nvidia call options that would make money if the stock climbed more than 9% by Friday to above $500 were the largest block of open options, with some 19,000 contracts still open. That's that open interest. Still, some strategists cautioned against further gains in the stock. A lot of good news is baked into this, Steve Sosnick, chief strategist at Interactive Brokers, said. The stock moves on earnings, but you can't just assume it only moves up, he said. This is what you need to understand. Nvidia options imply a nearly 11% swing for the shares in either direction. This is why you should not be trading this stock ahead of options, because of implied volatility. There is so much implied volatility that is baked up into options whenever earnings reports happen. So it is literally a gamble. You are betting on the stock to either go up, and you are betting on it to either go down, and it has to go up or down violently in the direction that you want. So the stock is going to have to swing 11% in the direction for you to make that level of money. The stock is going to have to swing 11% in the downward trajectory in order for you to be able to make that money. And you have to ask the question, is the capital that I am risking worth it in order for this particular trade to potentially go to zero when I wake up on Thursday morning? Let's take a look at the options chain to really truly show what I am talking about here. So I have pulled up an options chain of Nvidia, okay? The options contracts on the left are calls, and the contracts on the right are puts. So if we just look at, okay, what if I was trying to trade an options contract on Nvidia that's right there at the money? The bid would be $25.90. That means I will be spending at least $2,600 to purchase this particular contract to swing it, right? That $500 strike price that they were talking about, that's going to cost me at the bid price $10.20, right? If we're talking about the same thing on the put side, that would be a $422 put. That would cost me $10.40. What I'm telling you is that Nvidia has some baked up premium built up into this particular stock. And what I am telling you is that it is dangerous. And I mean that it is dangerous for you to be trading this stock, because you could lose all of that premium, and it could be way too risky of a bet, and the risk to reward may not make any sense. That's why I'm telling you that it may not be the best opportunity for you to swing trade this stock going into earnings. You may want to wait until after the earnings report happens to then make a move on this stock. Look, everybody, at the end of the day, Nvidia and Tesla are now in the same category. These stocks both hit the $1 trillion mark over the last couple of years. And what we need to understand is that both of these stocks move similarly. Both of these stocks are runners, meaning that these stocks can be up to 6%, 7%, 8% in the day. Also down 6 to 7 to 8%, even 10% down on the downside. What we need to understand is that Nvidia and Tesla are both quality stocks, but they operate in different lanes, and they're still different companies, right? They both have quality CEOs. They both have good products. They both have growth trajectories. And when I say, is Nvidia the next Tesla, it is based on how it moves, based on the volatility, based on the options market, based on how it's so popular and how people want to invest, how it's the new stock to really truly hit that $1 trillion club. I'm telling you, it's a quality stock, but you need to pay attention to what Nvidia is saying on its earnings report and wait until after earnings to trade this stock. As always, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Please like, please subscribe. Let me know if you believe that Nvidia is the same caliber of stock that Tesla is. Let me know if you like Nvidia. Let me know what you think about this particular stock, because it's going to be very, very important for us to understand this moving forward if you're going to be a trader and you're going to be an investor. As always, remember, don't pay for it. Trade for it. I'm going to tap in with y'all in the next episode.